Hello and welcome. You're watching Business Today Television. This is Market Today. I am Sakshi Batra. Well, the Indian equity markets have begun this week on a very strong note, extending on the Friday's momentum, but definitely looking at how the Monday panned out, it was pretty strong across the board rallies. What we've seen, the Nifty settling above 24,200 mark as well. In fact, we did open up with a massive gap up of 346 odd points, traded in a narrow range and closed at 24,221 on the Nifty. Now, of course, it was the heavyweight like HDFC Bank, ICICI Bank and even Reliance Industries that contributed significantly to the Nifty gains as well. HDFC Bank shares definitely hit a record high on Monday. It was at the top contributor both for the Nifty and the Nifty Bank, and this uptick followed the second tranche of MSCI adjustments which flowed into the stock as well. Remember, HDFC Bank has now reached a new high of 1803, surpassing the previous highs of July 3rd as well, and this has been also seen as part of the shareholding pattern that's been disclosed for the June quarter, making it eligible for a weightage increase in the MSCI Global Standards Index. Now look at what has happened to the flows then. The FIIs have turned net buyers in the Indian equity markets as of Monday, purchasing 9,947 odd crore rupees worth of equities, making it the second highest single day buying of the year so far 2024. And this also marks a significant shift, ending the 38-session streak of net selling by the foreign institutional investors. Of course, a large part of this was skewed towards that HDFC Bank buying because of the MSCI Global Standards Index changes that we could expect. Domestic institutional investors, however, they net sold equities worth about 6,907 odd crore rupees. So we'll keep an eye out on as to how this progresses. Global cues are positive. Look at the Dow Jones, which ended at record high levels, about 1% higher, closed at 44,736, marking a new record close. S&P 500 gained about 0.3%, again to settle at 5,987, again achieving an all-time high during the session as well. Nasdaq Composite also advanced by about 0.3% in trade. Asia Pacific markets have been trading mixed in the early morning trading session, following Wall Street's record-breaking rally that we've seen. So the ASX slipped about 0.3%, retreating from all-time closing highs on Monday. We did see the Nikkei also fall about 0.8% in trade. The Topix also dropped by about 0.6% in trade, and therefore GIFT Nifty futures are indicative of a muted start for the Indian markets at around 24,260 odd levels. We'll keep an eye out on as to how this progresses also going forward. 9 a.m. and we already have the pre-opening ticks. 24,515 is what we have, completely opposed of what we were seeing in the terms of the GIFT Nifty trends. This will, of course, inch lower as it is coming down now below, the 24,400 now being seen on the Nifty right here. But let's look at some of these heavyweights. Let's look at HDFC Bank as to find out how the second day will pan out after those record high levels in yesterday's trading session, whether that is inching up as well in the pre-opening trade for the second day in a row. So that's the Nifty in front of you, 190 points higher, 0.7% of an uptick can be seen around 24,400. But let's look at those heavyweight counters. HDFC, ICICI, Reliance Industries, these were the heavyweight counters of yesterday, and they did contribute to all the gains. Let's see whether there's a follow-up buying happening on that front as well. So definitely keep an eye out on HDFC and Reliance Industries, and we will also keep an eye out on the Adani Group stocks. Why am I saying that? Because yesterday there were a whole host of news developments that you should be really looking at, which will keep the Adani Group stocks yet again in focus. Remember, so Reliance Industries there in front of you, the prices have started ticking 2% higher at 1312. There are brokerage houses report that are penciling in over 1,700 kind of targets now coming in for Reliance Industries. So that could be buoying the sentiments. Let's also look at HDFC and ICICI in the meanwhile. Adani Group stocks, remember viewers, Andhra Pradesh state is now, as per some of the reports, is reviewing the power supply contracts that are linked to the Adani Group. So keep an eye out on that. Remember yesterday, French energy giant Total Energies announced a pause in the new investments, citing corruption charges, and which the company is completely against of. However, after the markets shut shop yesterday, they're one of the biggest investors of Adani Group, GQG Partners, the Florida-based investment company that has expressed confidence in the group, expressing the sound fundamentals of its investments and how they believe that the indictment is only limited to individuals and will not impact companies, and how the company which is in focus is only Adani Green right here, but the rest of the companies still remain insulated. There is a mixed opening for the Adani Group stocks right here. Let's in fact welcome our guests on board. We already are joined by Mr. Rudramurthy. He's the research head at Vachana Investments. And we also have with us Dharmesh Kant, head of equity research at Chola Securities. Warm welcome to both of you and thank you so much for taking the time out. Well, we have seen 2 days of consecutive moves on the higher side on the Nifty. I wanted to first begin by understanding from you, Mr. Kant, how are you really looking at this bounce? Do you think a durable base somehow has been made in the after the recent correction on the markets, and is the way going to be up gradually so in the markets now?
Yeah, good morning, Sakshi. I mean, it was a good breather coming in for a couple of days in the market. And let's look at the context. First is the earnings context. It has been a flat kind of a slate and with a negative bias. And this is likely to be so in the case of Q3 as well. Election outcome was there. But if you look at after Lok Sabha election, all 4 states where the elections have been held, the incumbent has held on to the power.
Hey
And
guys,
the
welcome to this session by Intellipat.
and the context for that was the freebies, the social welfare schemes which was there. And this is what is troubling my mind because the market participants were looking forward to a more of an aggressive budget with capex and everything playing out. Last budget, it was a muted kind of a budget. So the budget factor could have been the balancing act between the corporate earnings faltering and government push picking up the corporate earnings, which is not the case. I think till the budget is rolled out, this will be again a doubtful scenario. So, but given the benefit of doubt, I do think that 23,200, the levels which we have spoken about earlier as well, that should be the near-term lows or the bottom of the market till the budgets are rolled out. So, we will gradually inch to and fro, but nothing major is likely to happen on the index front.
Okay, let's also get Rudra on board to help us understand what is his take. Rudra, 2 days in a row we have seen this almost 1000 point rally. How would you really assess the moves right now? Do you think this rally could be continuing for the rest of the days in this week right here, or could there be some more impediments? Why am I asking you this is, globally we are seeing positive cues coming in. Oil prices have dropped sharply as well. So some of the macros are in the favor right now, but technically, what are you studying?
Yeah, Sakshi, good morning. Thanks for having me in the show. First of all, it was much easier from those oversold zones where last time when I was there in your show, I said, yes, we will be seeing a big bounce. And I was expecting that because we were highly oversold. Now the question is after 2 days of massive rally, which is about
Right. I guess there is some kind of an audio issue. Rudra, we'll try and fix that for you and we'll come back to you right there. But Dharmesh, let me come back to you. You know, the changeover that we've seen from yesterday is the flows from the FII front right there. 9,900 odd crore rupees have been poured in. That comes in as a huge sign of a relief. 38 consecutive sessions of sell-offs by the FIIs. An exodus of sorts is what it was called. Over, 1.14 lakh crore rupees has been already sold off in terms of the kind of pullback from the Indian equities is what we've seen, be it any kind of reasons, be it the China factor, be it the Indian expensive valuations factor, but there was no return of confidence happening. Do you think a large part of this only has to do with HDFC Bank and how the changes could take place in MSCI and will we again see a reversal in this trend, or do you think FIIs may finally return to the Indian markets?
I mean, as far as yesterday's, buying is concerned, it is largely to do with the MSI reject. So that has played out in yesterday's state. Today would be the litmus test whether they are thinking of, redeploying at current levels into the Indian market or not. And the type of stock picking which was there in the market yesterday, these are all blue chips kind of a counter like L&T, Reliance, SDFC, ICICI Bank. And there's no problem out there in this select pocket. So that did fairly well. To my surprise, IT did not pick up the way it was expectation was, and that's a question mark or a blur line out there in the context of buying which is happening. China factor which was playing out, I think now it is back because yesterday's Trump, if it goes by, the type of tariff levying he is talking about is not that aggressive. I mean, some total it may reach to 60% eventually, which is targeting because there's already a tariff on the Chinese import, plus 10% will be somewhere near that. But it's not too hawkish, and these are more of a negotiating tools which he uses before coming to power. And I think eventually he also understands that business has to be there for the US market as well. So that, I mean, influence will go away. That sale, I mean, the wind in the sail will go away from Indian equity buying. So you have to deliver on the P&L part as far as India is concerned, and that is at least Q3 will give some inkling of that fact that whether numbers are going back into the positive territory and the budget. So these are two parameters. But yes, the FI selling should abate now. The way they were selling aggressively, it should be a largely a muted kind of a selling session. If historically December has been anyways a very low volume a month for FIs, as most of them go out on a holiday. So that pain factor should be out of the market now.
Okay, got that. So the markets have settled in the pre-open. Let's again look at the market setup. 24,343 is where the Nifty has settled in pre-open, 121 points higher. That's half odd percent of an uptick. The Nifty Bank at 52,554. That's a 350 point of an uptick, or almost a 0.7% of a surge that you can see. Again, all the sectors are indicative of a positive start. So that's another big positive as a setup. HDFC Bank looks to be the top mover on the Nifty for the second day in a row, and 1810 we could be looking at record high opening for HDFC Bank right there, almost 1.4% higher. IndusInd Bank, Infosys, Cipla, ICICI Bank are the other movers right there. So the banks could be in thick focus, private banks particularly. We also have the realty space that were in fine shape yesterday. Oil and gas could also be in focus right there. Remember, real estate stocks have been in thick action, and that also could be looking up right there, 0.6% higher. So that's how the setup is. The PSE index also looking at about 0.3% of gains. But let me come to the banking space and HDFC Bank particularly, Dharmeshji. How would you look at record high levels for HDFC Bank, and where does the stock go from here on?
I mean, it can still go up for 4-5%, but to my mind, there are better choices in the private sector banking space where the growth trajectory will be far higher than what HDFC Bank can offer you.
Okay.
And if you look at the earnings of most of the large banks in the Q2, it was more of a treasury income which drove their profitability, which won't be there in this quarter because of, again, they have taken most of the profit booking in the last quarter itself. So to my mind, I think Axis Bank and ICICI Bank from the private banking space still looks a better bet than an SDFC Bank. The margin of safety may be high, but so is the case with ICICI Bank. We have been recommending both this bank to our clients when compared to SDFC Bank for the portfolio buying perspective.
Okay, got that. How about the PSU banks? A very strong run-up was seen across the board even yesterday. You've time and again talked about SBI on our platform as well. Would you stick to that one? Would you also look at some of the other PSU banks now that could be added afresh amidst the momentum right now?
Yes, actually, if you look at the numbers of Q2, I mean, they outperformed the private sector peers, be it SBI, Bank of India, Canara Bank, PNB, all came out with a very good set of numbers, both on the growth front as well as on the asset quality, plus the deposit traction. Everything was there in place. And they have a very good CD ratio, so their elbow room is there to cater to the upcoming growth. But the only caveat which is happening right now is with this welfare schemes going across the board in state governments and central government, the PSU banks are the vulnerable lot where, lending to the vulnerable section to the society can return back. And we have seen a problem in the unsecured or the MFI segment playing out.
Right.
So how this factor plays out is the only caveat. But if nothing goes wrong, and this is just a guesswork I am doing right now, then they are still a very good buy. I mean, traction in SBI, Canada, or a Bank of India will definitely be better than ICICI Bank. But for that, we have to wait till 1st of Feb when fine lines are out on the budget count.
Okay, got that. Let's get Rudra back on board. He is with us. Rudra, we were discussing the entire banking space just before you joined in. HDFC Bank finally hitting a record high, mark yesterday. A lot of it has to do with the MSCI rejig. And of course, PSU banks, the way they have rallied over the last few days is also, keeping investors' attention, back to the PSU banking space as well. Where exactly would you be more bullish, PSUs or the private sector leaders?
First of all, banks were the only sector where you had some amount of valuation comfort, relatively much better compared to other sector. And also, continuously I was talking about stocks which are still trading above those lows of October.
Yeah.
And if you see, I was talking about HDFC Bank or even both private as well as public bank. Look at even SBI. The rally what we have seen in last 2 days has been from those very highly oversold zones. And post the Adani news, these PSU banks were butchered. And that was a wonderful opportunity where people could have bought, where risk reward was very much in your favor to go long. But however, even at current market levels, I say yes, this 2 days of rally and 1,000 points move, what you have seen in Nifty, we have to see some amount of time-wise correction right now. And also what is very important is, look at the result season. Always remember, stock prices are slaves of earnings. The last quarter earnings, 75% has been below expectation, both on the top line as well as bottom line. So I am of the view that till you see February, once our budget comes out and we see the next quarter's earning coming out, that is the October-December quarter earnings coming out, and we see some amount of recovery, I will not be surprised that this rally what we have seen will see some amount of more time-wise correction, and we should settle somewhere here at index level. No doubt we fell 10% from the top on index and we have recovered about 4% now. But do remember, if you see most of the stocks in people's portfolio, they are on an average down 20 to 30%. And the recovery in last 2 days for their portfolio has been hardly even 0.5 or 1% when Nifty has gone up 4%. So we have to keep in mind that portfolio bleeding has still not stopped. I am of a strong view that this market will not go back to all-time highs very soon. Minimum it will take time till February 2025, and for these portfolio stocks, mid and small cap, to come back to those high rich valuation levels and those top, it will take some more time post even February 2025. We are all talking about 38 days of selling from FII and yesterday's buy figure, but if you can understand MSCI rebalancing and 15,000 crore of buying happened because of MSCI. So after considering that 15,000 crore of buying, we hardly have 10,000 crore net buying yesterday. That means it is still 5,000 crore of selling by FII yesterday, keeping aside the MSCI rebalancing. So for me, this market is more sector specific, stock specific. Don't just see last 2 days of rally. It was easy to call that before, but now I will be very stock specific, sector specific. Few names where results were good and stock can still do good from current level. I can name Federal Bank, I can name Indian Hotel, Ramco Cement, and banking. Most of the stocks, both private and public sector, they can continue doing well, Sakshi.
Wonderful. And the markets have also hit open. Let's quickly check the market opening. 70 points high in trade, 24,295. So somewhere in line with what the GIFT Nifty was indicating, 24,300 and thereabouts is where the Nifty is really toggling at. Let's look at the Nifty Bank. That's about 0.2% higher in trade, 52,300. So it's a mildly positive opening for the Indian markets right now. Sectorally, FMCG is also pulling up today, 0.8% higher. You have the IT stocks that are buzzing, 0.7% up in trade. Real estate stocks again for the second day in a row rallying this week, 0.7% higher. You have the broader markets also about 0.5% higher. But what's not doing well? I think the autos have slipped into the red right now, and there is a lot of volatility in some of the other sectors right here. If you look at the India VIX, that's toggling around 15.5 levels, a percent higher right now. The top mover on the Nifty is Bharti Airtel, 1.1% higher. I think the telecom stocks is something that we will keep an eye out on. Vodafone Idea is the top mover in the F&O space, about 10% of a move on the higher side. 7.7 is the level at which it is trading at. The PSU index is in fact slipped into the red, with BHEL, HPCL and BEL are the stocks that are outperforming right now, percent higher in trade. PSU banks are now turning red, seeing some profits being taken off right after yesterday's strong over 4% of a surge. Oil and gas and metals and even autos have now seen some mild profit booking taking place. But let's look at HDFC Bank and see whether there are record moves that are coming in for the second day in a row. 1803 is what we saw yesterday, and right now you see a 1786. So some retracement happening right there. We'll keep an eye out on HDFC Bank on that front. Let's also look at Reliance Industries, where a slew of brokerage houses have come up with higher targets on this one. Finally looking at a risk reward that is favorable, about 0.25% higher. 1290 odd levels could be seen. Let's also look at the other heavyweight counters within the IT pack, Infosys and even TCS. Let's also also look at HCL Technologies. Those are the pockets that you could be really looking at within the IT pack. Yes, Infosys is up by 1.8%. That's leading the rally in the IT pack, and the IT stocks are now moving to the top spot. Apart from this, half odd percent gains also for HCL Tech right now. It's the FMCG space that's garnering some strength. You also have stocks like ITC that are pulling up in trade in the morning session itself. 0.6% higher. HUL is also moving up right now. You have Reliance Industries at about 0.3% higher in trade as of now. Let's also look at a few other stocks that are in news. Zomato, for instance, its QIP has launched. Sources are indicating a price of about 252.6 rupees per share, which will be about a 7.5% discount to the current market price. About a 1.5% of an uptick is what you can see on Zomato as of now. Let's look at Indigo as well. The market share has seen an increase for this month on a month-on-month basis for Indigo at about 63.3%, about a 0.8% of a surge. And there is also a code share that could be happening with Japan Airlines for Indigo. We'll keep an eye out on that one as well. Apart from this, let's also look at some of the other stocks like Swiggy, for instance. Zomato we just checked, but UBS has actually upgraded Swiggy, or in fact, it's initiated a buy rating on Swiggy with a target price of 515. There's a 3.5% uptake coming in on the back of that one too. Let's also look at some of the pharma stocks that were in thick momentum yesterday as well. Sun Pharma is on the radar of Goldman Sachs here. They have a sell rating with a target price of 1600, and they do believe that on costs, Sun has noted that it's lowered the R&D guidance to 7% from 8% of sales due to delays in the clinical trials in FY25, pushing it to FY26. So there could be some concerns right there on Sun Pharma, and that's why there's a sell rating coming in. But the real estate stocks, that's going to be important for us to track. Jefferies has come out with a report. They're talking about how the residential markets have seen some selective buying happening, and of course they prefer Godrej Properties, Lodha and DLF within that space right here. Even yesterday we did see Godrej Properties, DLF and Macrotech Developers, all of them in thick momentum right here. But let's look at the broader markets to see how the early morning momentum is shaping up. 0.4% of a surge on the mid cap 100 index, about a 0.3% of an uptick on the small cap 100 index as well. Where do you see momentum within the mid caps? Let's look at the top movers right here. You have Vodafone, Indus Towers, so the telecom space coming back. Cochin Shipyard about 3% higher. Then you have Yes Bank, Bharti Hexacom, Sundaram Finance, Aditya Birla Fashion, Colgate Palmolive. All of these stocks are the ones that are gaining ground in the mid cap space. Let's look at the small caps then to see how the momentum is shaping up on that front. You have Tata Teleservices, Triveni Turbine, Perso Solutions, Gains Technologies, Tanla Platforms. These are the stocks that are upwards of anywhere between 3 to 7% in trade. But telecom space clearly is grabbing my attention. I'll bring in both our guests to talk about it. Dharmeshji, your sense of how would you really look at the telecom space, what's really happening from the cabinet side as well. There are reports that there could be some waving off as far as the bank guarantees are concerned, and that could be probably helpful for some of the beleaguered companies like Vodafone right there, and even MTNL for that matter. You also are seeing Tata Tele in thick momentum. From yesterday's last half an hour or more, this move is extending within the telecom basket. How should one assess it?
I mean, actually, apart from all these moves which may come from government of India, I think the business itself is doing pretty fine with the 5G rollout and the data business picking up quite nicely. And the guidance of the Bharti, like ARPU of 300, they are already on that track. Even Jio is following that. So eventually the ARPUs will increase for all these companies. Going forward, though the valuations may look rich, but again, Bharti is the preferred pick. And I think Reliance, with this kind of a correction which has happened, it becomes very attractive at current levels, both for the digital play as well as the other businesses as well. So I think these are the two companies which one should be looking for. And this is I mean, this business is where you should be staying put. Okay. So there is no need to, sell away. And if there is a selling opportunity of market comes through, you can add that to your portfolio.
Okay, but Vodafone, do you see this as a relief rally coming in, or would you still ask investors to be cautious till the time there is greater clarity?
Sakshi, this is my gut feel, because Vodafone is very difficult to predict because there are so many moving parts and so many things are subject to government discretion and the judgments which come along. But I think this company is going to stay here, and if you have a long-term horizon of say 2 to 3 years, then definitely if things turn out in this favor, which has been, I mean, government is holding more than 30% of the equity stake here, then it's definitely a multi-bagger to my mind. And that is what we have been advising our clients about this company.
Okay, let's get Rudra on board. Rudra, you've time and again come on our channel and talked about this space, and you've always talked about the leader in the pack to be the safest space to be in for investors like Bharti Airtel. Would you stick with that view? With this kind of news developments coming in from the government side, how should one assess what's happening in the telecom space?
Definitely, Sakshi, I will buy only Bharti Airtel if I have to pick among the three stocks which are available from telecom. But however, if you want to pick a mid-cap stock, even after today's move of about 4%, Indus Tower looks very good for me. It was at around 410, 420 zones where I was saying it is a mouth-watering buy. And we have seen already that move of 4.5% now. So for me, if you want to stick to telecom sector, I will definitely go with Bharti Airtel and Indus Tower. And Indus Tower will be the indirect beneficiary because of even Bharti Airtel doing good. And Indus Tower from current levels can even go to around the 380, 400 zone. And for me, Bharti Airtel at around 1500 has a very, very strong medium to longer time frame support zone. So any dips to those levels and even at current market price, I will still stick out and buy Bharti Airtel. And my second choice will be Indus Tower. I will definitely avoid Vodafone. And might be, yes, it can be a stock which you can bet 5% of your portfolio, thinking like it's like a lottery. And if you lose 5% of your portfolio. But if you make money, yes, it can be a doubler or a tripler from here. But rather than betting on Idea Vodafone, I would directly love betting either on lottery or on Goa casino games than going with Vodafone Idea from levels of around 100, 200, I don't know, from the top where it is now in single digit. But yes, you might see some amount of recovery from current levels of around 6 or 7 rupee. Can it go to that 11, 12 rupee, and can it be a doubler kind of a stock from here? Yes. Keeping your fingers crossed, you can bet 5% of your total portfolio's value on Vodafone Idea, but I can't take bigger bets here. Rather, I will prefer Bharti Airtel and second choice will be Indus Tower.
Okay, got that. So that's as far as the telecom space is concerned. You've heard both the viewpoints of our guests on that front. Before we go on to the next segment to discuss, there is some news flow that's coming in. I wanted to make all our viewers aware of it as well. There is a note coming in from RBI spokesperson about RBI Governor Shaktikanta Das. He's saying that Governor Shaktikanta Das has experienced some acidity and he's been admitted to Apollo Hospital in Chennai for observation. He's now doing fine and could be discharged in the next 2 to 3 hours. There is no cause for concern as of now. So just praying for his great health and hoping that he turns absolutely fine over the next 2 to 3 years. Just wanted to highlight that for all our viewers as news just coming in. But the markets are turning even higher in trade now, about 0.4% higher, and 24,300 is now with us on the Nifty. Remember, the Nifty Bank is about 0.2% up at 52,300. But all the sectors on the Nifty are actually higher in trade, led by the IT space particularly. Let's discuss the IT space right now. Dharmeshji, how would you assess the current space? You know, there's a lot of expectation that Trump's administration would definitely be a big positive for the Indian IT space right there. Of course, with the dollar getting strengthened, this is another positive for this one. Clients will be loosening their purse strings because the taxes will be lower over there. So for somebody who has a medium to long-term perspective on the IT space, how should one be really picking and choosing within the entire gamut right now?
I think E and RD is the space for the IT sector which one should be looking at, and not the vanilla software providers. And the jury is still out whether generative AI will benefit Indian IT companies or not. So that is out. Trump is very difficult to predict right now how the tariffs and onshore, offshore, all these things are going to play out. And the wage, I think his administration was the first one to come out to hard on the Indian IT companies in the first place. So let's see how that pans out. But I do think there are multiple choices out there in the mid-cap space in the Indian IT sector, like KPIT Technologies, which is fairly into automobile technology. Looks fairly attractive to me. The earnings were good, but somehow the market did not like it and the stock came down. But at current market price, it looks very attractive to me. And same is the case with Tata Technology. So these are the two technology based which are primarily into automobile EV space, and they are coming out with new softwares for entire new age automobile drive play as far as that is concerned. So that is one basket which is looking good. And apart from that, one can look at Genser Technology or, uh, KPIT, I have already talking about, and Birlasoft. These are the two companies which to look at. I am avoiding all the large caps. I mean, Infosys, TCS, SCL Tech, and Wipro. This is the space which looks fairly overvalued to me. And this is what we are avoiding as a new trade. Those stock prices may see gyrations, but it's not a trending buy to my mind.
Okay, got that. Rudra, how about you? How are you assessing the opportunities within the IT pack? Are there any favorites of yours within either the large or the mid cap space here?
Yes, actually, last time I told you for someone who has a 1 to 2 year kind of a minimum time frame, yes, IT will be the top sector for me at current market price.
Yes.
And definitely, yes, I'm preferring banks also, both private as well as public bank, and especially names there are very important. So for me in IT, last time even I spoke, and the same names I'm repeating, it will be
Sure.
Wipro as well as Tech Mahindra, which is looking very good for me. And one can definitely look at targets of 800 on Wipro, and Tech Mahindra above 2000 zones can come very fast. So Wipro and Tech Mahindra will be my top two picks when it comes to IT as a pack. And overall as a sector, I feel IT also came out with good results last quarter, if you see, and even in banks except Indus India Bank, most of the banks came out with good results. So for me, IT as well as banks will be the two sectors where one can definitely buy into, keeping in mind the next 1 to 2 year time horizon. And when it comes to banks, as I have named already, my top two picks from private bank will be both HDFC Bank and ICICI Bank. Even at current market price, they look attractive for me. And from PSU banks, if you want to buy, I will stick to first State Bank of India, followed by Canara Bank, and then Punjab National Bank. So these are a few picks what you can take. And if you want to pick a mid cap bank which came out with good results and even at current market price looks attractive for me, will be Federal Bank. Federal Bank at around 210, even now at 212, whatever current market price looks attractive for me, one can look at targets of about 250 to 270 to come in shorter time frame, and then over a longer period, yes, further moves can be seen. So these are few stocks which I like, and sector wise, yes, banks and IT will be my top two picks.
Okay, got that. So banks and IT is right there. But let's also discuss one more sector, and that's something that we mentioned right in the opening, comments as well. The Adani Group stocks are important to track for the for today as well, to see how the momentum is building up. Most of the stocks are actually lower in trade yesterday. There were some bounces returning to across the board, but again some pullback happening right now. About 0.7% of an uptick on Adani Enterprises, so that continues to be in the green. Let's look at Adani Ports and Adani Green, however, is lower by about 1.5%. Remember, this is the company that is in the center of what has been discussed as far as projects for this company were taken in by Gautam Adani, and the charges of bribery have been leveled against him. 0.5% decline for Adani Ports right now. Let's also look at Adani Energy Solutions. Let's look at Adani Total Gas as well, to see how some of those are indicating flattish with a negative bias kind of move across the board on that front. Dharmesh ji, how have you assessed the developments over the last few days on the Adani Group right now? There are further statements coming in from all the partner investors, from even the state governments now, which are mulling as to whether they should be rewarding the contracts that have been earlier talked about to Adani. In case that happens, as the reports are indicating, then will it be a long-term negative for the group right now? Because of course, one is that of course he's been indicted, and several other officials have been indicted. There could be a legal process, there could be a penalty that the group will have to extend. But then what happens to the future investments, and what happens to the projects that were being awarded? If they get compromised, what happens then, and how should investors be looking at it?
Yes, actually, this time things are looking different. I mean, it's not a, research house coming out with a
Yeah.
report and some allegations on the, this time it's a district court verdict. And similar, steps have been taken in the India as well. And these news flows are definitely disturbing. We have already seen loss of business for the Adani Group, like Indian government, they cancelled the orders. And if it happens in India, it would be a big blow to my mind. So certainly, it doesn't look a easy situation right now. It would be a difficult situation, and many things will open up. I mean, this is just one case which has come out. I don't know if the linkages start opening, how many threads can open up. It's difficult to suggest or guess right now. But to my mind, this is a serious development which is happening out. Let's wait and see. And corporate governance is one issue, like especially outside India, people are very particular about. If you even if you are found guilty once, they are twice try to touch you and give business to you. So that challenge will remain with this group now from here on. So better avoid the space completely. That is a right way to look at it right now. Though there are few businesses which does have significant value, like Adani Ports has a good value in their power itself. Adani Power has a good business value out there. But in this challenging environment, and even if existing business order gets cancelled, then what you do? You lose in spite of having the facilities in place. So that is the context. So better stay out.
Okay, got it. So that's the view coming in. Rudra, how about you? Within the Adani group, would you still have confidence in some of the group stocks, or is it advisable to just completely stay away till the time dust settles on all the developments?
Sakshi, this has been the easiest question I can answer and very clear on Adani group of stocks. Number one, look at valuation and also see where were the prices of these stocks before the big fall which came from October. So if I see what is the high on Adani Energy before October 1st, where the overall market fall came, Adani Energy, if you just go and see, or Adani Green Energy was just trading at around 2000 rupee, if I'm not wrong, and that was the peak it made, and that was at around September last week to October. From 2000 rupee, the stock is now available at around 950. That means it has corrected 50% in last 1.5 months. Okay, even after 50% correction, let's assume someone wants to buy Adani Green right now. Kindly just look at what is the trailing PE multiple. I'm not talking about forward looking earnings and then discounting them and then coming out with the forward PE. I'm talking about the trailing PE that is coming at around 120, 130 times after a 50% correction in the stock. So my question to you, after a 50% correction in stock, do you want to buy Adani Green at a PE multiple of 120 times? And do you expect a growth of around 120% to happen year on year? And it is already on a larger base, and that too after a 50% correction in stock price. So for me, it is a clear no. And only bad news, Sakshi, Adani Green Energy is not available in F&O to short.
Okay, right there. Clear no from Rudra on the Adani group of stocks. Okay, then let's look at some of the other pockets where perhaps there could be some opportunities. Rudra, have you identified any opportunities within the mid and the small cap space where investors could look at, particularly now after some retracement is happening within these spaces as well?
Sakshi, I'll be very clear. I feel personally that still market has not yet made a bottom. Stay with large cap stocks because valuations are more comfortable compared to mid and small cap even after this correction. And if you force me to buy some mid or small cap and be very stock specific, as I told you last time, even I want to buy those stocks where the quarterly performance especially has been still better. In the recent results, if you see, results are better or still good and stock has not performed equally. So for example, let me take Indian Hotel as an example. Fantastic result, stock even did well, and even at current market price, I will be a buyer in Indian Hotel. It's a 4-digit stock. Very soon you have to see Indian Hotel coming to 1000 plus level, and for me that is one stock which you can buy. I was talking about Federal Bank. Yes, quarterly results were good and stock performance is still good. So Federal Bank at around 210 offers great value to me. And look at OMCs, for example. Crude coming down is definitely good for OMCs. And for me, in the order of preference, I will be first looking at Hind Petro at current market price of 380, or even last 2-3 trading sessions before it was available closer to 360, and now it is at around 380, 390 zone. Yes, for me, HPCL even at current market price looks good. crude coming down is good for OMCs and HPCL is good. You can even pick up BPCL and IOC for that matter. Ramco Cements came with good quarterly results. Stock price can do good from here. So if you want to pick some stocks from mid cap, look at these names like Federal Bank, Indian Hotel, Ramco Cements, and Indus Tower, OMCs like Hind Petro, BPCL. All these are stocks which one can look at.
Perfect. So there you have it, viewers. I hope you've taken down this list of names that Rudra has mentioned, where you can actually look at for valuation comfort, for upside from the current levels as well, in case you're looking to pick and choose and select stocks for your portfolio in this slight signs of recovery that are returning to the D Street. The other space is the defense space that's also buzzing very sharply. And from yesterday, we've seen momentum return to the defense stocks strongly as well. Even today, stocks like Garden Reach Shipbuilders that are up 7% in trade. About 1546 levels can be seen on this one. Cochin Shipyard is 5% higher at 1432. Mazagon Dock is up about 4%. You have BEL, HAL, both about 2.5% higher. Data Patterns, the index itself is up by about 2% right now. Your own sense, Rudra, on the defense space, do you see confidence returning to this space, or do you still feel it's going to be momentary?
Sakshi, very clear view. First of all, I was giving a big no-no for either defense or shipping or railway stocks for that matter, keeping in mind valuation and the way in which these stocks had already moved up. But if you now see, for example, Hindustan Aeronautic, HAL, the top was at around 5,600. From there, we saw a bottom which was closer to 4,000 rupees. So stock corrected from its peak close to 1,600 point, and percentage wise, if you see from those levels of 5,600, if I take 1,600 point, that is close to 30% kind of a correction from the peak. So having seen this kind of a correction, yes, if I have to buy one stock from defense, it will be HAL. No doubt it has moved from those 800 zones to that 5,600 level. But yes, strong long-term support. And also if you see the June lows what HAL made technically on chart, that was also closer to that 3,900, 4,000 level. So yes, closer to 4,000, it becomes very, very attractive to go long on HAL. Even at current market price or on dips to levels closer to 4,000, I will be a buyer in HAL. But few other names, whatever I see either from railway or shipping sector, I will still avoid them because of, again, even after this correction or whatever price move we have seen on the downside, valuation comfort is still not available. Rather, I will go for either OMCs. If I have to pick up some PSU stocks, I go to PSU banks, or to OMCs at current market price. I will avoid, in general, all the three, that is shipping, railway, as well as the defense sector. Only for the news of the railway as well as the defense, currently what we have, this kind of an up move you are seeing for last 1 or 2 trading session. But again, valuation will kick back, and if you want to buy one of these stocks from this sector, I will still prefer HAL at current market price and on dips to 4,000.
Okay, got that. So there you have it within the PSUs. All the pockets have been addressed by Rudra right there. Defense, railways and other PSUs, especially the OMCs, where he is more comfortable with at the current levels right there. From the broader markets, let's see what are the big moves that are coming in. You have Tips Industries or Tips Films that's up for the second day in a row. Yesterday it was a 20% circuit. Right now it's up about 15 odd percent. Then you have stocks like RPP Infra Projects that's up 10%. Shivam Autotech that's up 9%. You also have stocks like Emcure Pharma that's up by 7.5% in trade. Strong surge being seen on this one as well. Apart from this, we also have Triveni Turbine that continues to be in thick momentum from last few days, 4.5% higher. Yes Bank is also up by about 6.5% in trade. So those are some of the stocks that are buzzing in the broader markets right there. Within the Nifty Next 50, you have Macrotech Developers that again moves up pretty strongly within the real estate pack, 5% higher. Varun Beverages continues to surge up, about 3% up right now for this one. Both PFC and RDC are also pulling up within the PSU pack right there. You also have some momentum coming back to Info Edge kind of stocks right there. And of course, both Zomato and Swiggy are in thick momentum. Let's look at Zomato and Swiggy right now. Rudra, I wanted to understand there are several triggers for Zomato. It's going to get included in the Sensex since December. There is expectation of a lot of passive flows coming in also on Zomato. First, tell us, do you really expect further, rally from here on as well? It's a comeback after those declines that we have seen in the recent 5 weeks correction. It's also pulled up pretty much to 280 kind of levels. Your own sense on Zomato from here, and whereas on Swiggy as well, looking at the valuation comfort that continues to exist on Swiggy versus Zomato right now, do you feel Swiggy has a better chance of outperforming right now? How should investors be placing their money between these two?
Sakshi, very clear view in terms of new age companies, e-commerce. If you want to put your money into this sector, I will still have Zomato at current market price as my number one pick. In fact, for me, Paytm and Zomato are the two stocks which I will buy. No doubt, Paytm for me at 400, 500 was more comfortable. But even after this move towards that 800, 900 mark also, for me, Paytm is more attractive. No doubt, Paytm at 2000 was a clear no-no. But post all the fundamental changes, what happened, RBI ban, and then now coming back. And if you see, last time I was giving you a clear view, look at stocks in the month of October 1st, where the prices were. And today, if they are trading above the October 1st price, that is the first indication for me for the stock to buy. Look at where was Paytm on 1st of October and see where is the price today. Definitely today's price is still higher than October 1st price, and that tells to me that these are relatively stronger stocks, technically also because of price move. And also for me, both Paytm and Zomato will be my top two picks if I have to buy into this new age or e-commerce kind of a business. And let me tell you very clear, Zomato at around 270, 250 zones, it is a good buy. Strong support for this stock is at around 240. So buy at current market price, buy on dips, Zomato. Keep a stop loss at around 235, which is below that strong support of 240, and ride for target of around 350 to 400 on Zomato. And if you are a very long-term investor looking for at least 3 to 5 years kind of a time horizon, then I will tell you, yes, Swiggy can be a better bet than Zomato. But if you are a short-term, 1 year kind of a investor, 2 year kind of an investor, and not that 3 to 5 year or a longer time frame, then I'll still pick Zomato at current market price, because Swiggy might take some more time for it to move beyond the comfort in terms of both profitability as well as getting more share. All that stuff will take some more time. So very clear view, if you have 3 to 5 year kind of a longer time horizon, or even more than 5 year, then go for Swiggy. If your time horizon is 1 to 2 year, I will still pick Zomato at current market price. But however, I will still avoid Ola Electric. I will avoid many other names in this same field of new age or e-commerce kind of a sector. I will not venture into any other stock except for Zomato as well as Paytm at current market price. And for long term, look at Swiggy. For shorter term, look at still Zomato.
Okay, got that. Well, we will thank you on that note, Rudra, for being with us on this show and helping us with your clear understanding of various sectors, pockets right now, and giving that guidance to all our viewers, which we always appreciate from you with utmost clarity in these times of uncertainty, which is the much needed, valuable advice at this point in time for all our viewers. Thank you so much. Appreciate your time with us as always. All right, viewers, what we'll do is we'll start looking at wrapping up the morning. First half an hour now out on the markets. You already have a half an hour candle developing, 24,257 right now on the Nifty, 34 points higher in trade. Although we've come off the higher levels that we had seen, we are quickly seeing some retracement happening, about 34 points now up right now. 24,250 is with us, but we've come off from that 24,300 mark right now. What is leading to this somehow retracement that's happening? Pharma has slipped into the red, about 0.4%. Autos are now down 0.3%. Infra and consumer durables, these are the pockets that are slipping in trade. Let's look at the top stocks that have slipped on the Nifty. Ultratech Cement is down over 1%. Adani Ports down over 1%. Bajaj Auto, L&T, Trent, M&M. These are the stocks that are lower in trade. Let's look at the other stocks. BEL, Infosys, Shriram Finance, Tata Steel, Tech Mahindra. These remain as the top movers on the Nifty right now. Even though the market breadth is favoring the bulls at this point in time, there is a lot of volatility that is further pulling up. So you can see 15.6 levels on India VIX, which is now up by about 2%. So we'll see how it goes. The PSU index right now is holding up 0.5% higher. Momentum continuing the OMCs like HPCL and BPCL. Even HAL, BEL from the defense pack are inching up. The defense space as a whole, including the shipping stocks, they are doing well. It's the telecom space that is definitely garnering all the attention. Vodafone Idea is the top mover in the F&O space, about 8% up. Indus Towers follows, about 4% higher in trade for this one as well. We have the IT stocks and the realty stocks that are definitely outperforming right now, but we'll see how it follows through from here on as well, and whether we are able to sustain on these moves and build on, or will we see markets see some more volatility return to the D-Street after 2 days of consecutive upward momentum that we've seen on the benchmark indices and across the markets. We'll keep you posted with all the developments, so stay tuned with us on Business Today Television to track all the momentum and all the developments in the business world.
It doesn't matter if you're booking movie tickets, concert tickets, or even cricket match tickets. Book My Show has been the go-to app for all of us for years. But now there's a new kid in town, District by Zomato. So is District just a copycat app, or does it have something fresh to offer? Let's find out. So firstly, what are these apps all about? BMS or Book My Show is a giant when it comes to entertainment bookings. Be it live events, cricket or other sports, concerts, movies, it has everything. It is the one-stop platform for all kinds of entertainment bookings. Zomato's District, on the other hand, aims to combine dining with entertainment. It aims to be a lifestyle application wherein you can even make live ticketing bookings and also make restaurant bookings. Zomato is actually a new player in this ticketing industry. It recently acquired Paytm Insider's complete ticketing business to enter this market, and to showcase its powers, the entire Diljit Dosanjh tickets were sold exclusively on the Zomato app, the Zomato dining app, not District. District is now recently introduced on iOS and Android to move this entire ticketing business and combine dining onto one platform. Now, Book My Show has a well-established user interface, refined with years of data and feedback from its users. District, being the new kid on the block, has taken some inspiration from Book My Show, of course, but has added its own twist with new designs, fresher colors and a better overall look. District has an upper hand here for sure, but Book My Show's event catalog library is just incredible. That's something that District at the moment cannot match. But one thing I really like on this new District app is when you're booking a movie ticket, you can actually share